ever, sometimes it's like a deja vu thing, when you're reading something and then all of a sudden something comes into your world. I'm not talking about on Facebook because it knows what you're talking about. I was sitting reading the latest Kia Ora magazine on Air New Zealand on heading up to the North Island, and was enjoying an article all about the Aotearoa Circle and a sustainable finance forum that was created between a public and private partnership. The article went on about our current financial system having to contribute to environmental degradation and entrenching inequality across many measures, and how to transform this, we have to bring natural and social capital into the financial capital world. Then comes into my inbox, latest Rabo research report around this. New Zealand's agricultural sector is well placed to capitalise on a growing trend of sustainable finance. And a new report from Rabobank showed this. The market for sustainable finance, specifically used for activities which produce a verifiable positive impact on the environment or society, continues to grow in scope and scale, the report says, as financial institutions and businesses increasingly direct capital into investments that improve their sustainability performance. As we're also talking about trade, it is with pleasure, of course, to welcome back to the program Rabobank Sustainability Analyst Blake Holgate. Blake, it must be just the time where everybody is talking about this across all of these different platforms. And of course, on the Rabo Research podcast, you also have been sharing your thoughts and reports on this. So what does sustainable finance mean?
Yeah, well, as you set out at the start, Sarah, it's capital that flows into businesses and sectors that can provide a meaningful and verifiable positive impact for the environment and or society. And often that impact is linked to international agreements like the Paris Agreement or UN Sustainable Development Goals. So the general idea that out there we're seeing increasingly investors direct capital away from activities they consider non-sustainable, so fossil fuel use, for example, into sectors and businesses considered sustainable.
To attract investment that wants to look for that triple bottom line, because is the return on investment, is it really there yet to justify under the current financial system?
Yeah, well, look, it's interesting to look. There's a couple of drivers behind it. So initially, it was sort of a voluntary desire by investors to invest for social good. And also a belief that many of these investments in the long term, investing in sustainability, was actually going to provide a positive financial benefit. Increasingly, though, with regulations like the Paris Agreement and respective national climate change requirements, this is actually changing the risk for many businesses across the globe and many sectors. And investors are starting to now factor that into their decision and thinking, if these sectors are going to need to make changes to meet new standards, new requirements, what does that mean for long-term viability of those sectors? So they actually see some real positives in investing into sectors and businesses that they think won't be as adversely affected.
So this is shoring up their supply chain for future consumer demand, as opposed to potentially buying up land to offset carbons for their own good.
It can be structured in many ways, and here in New Zealand, it have to adhere to whatever the relevant land purchasing requirements are. But I think generally from a New Zealand perspective, the idea is that if we position ourselves well, we can actually attract a lot of capital into the sector, and that could come through traditional debt businesses like banks, so to enable us to attract more capital to lend out to farmers to spend on the changes that they might need to make, or other forms of sort of managed funds that want to invest in some kind of partnerships with New Zealand businesses to help them improve their sustainability performance.
Okay, so how can New Zealand capitalise on this with our already strong environmental credentials?
Yeah, well, I think you make a good point first. I think we're in a relatively strong position. One, where internationally we've got a good reputation, both for our environmental performance and as our performance as farmers. We also have a robust regulatory regime. So if you look at something like climate change, we know what our agricultural targets are. We know that by 2025, farmers will have to report on their emissions, and there'll be some kind of price obligation with that. So that sort of provides investors with a bit of certainty around what is required in New Zealand to make some positive changes. And on top of that, we've already done many of the things we need to do in terms of having many farmers have farms and farm environmental plans in place. They're already collecting information and data on their farm performance. To go the next step and really capture those advantages, we need to do a couple of things. And one actually is some of the work that Aotearoa Circle is doing around defining sustainability. So what does sustainably good farming look like in New Zealand? What are the practices or outcomes that we can say to investors, we will deliver this outcome, which is above just a normal outcome? But probably the big one is actually the technology around collecting on-farm information and data, and able to do that in a cost-effective, practical, and verifiable way. And we probably don't have the tools to do that at this moment. And I think over the next couple of years, it's around developing those tools that, again, user-friendly, cost-effective, and can give accurate, timely data and information on some of the positive impacts that are already happening on New Zealand farms.
In your role as a sustainability analyst and working within a bank, what are the conversations that you're having in terms of financing the impending environmental regulations? Is it one out of cash flow and ongoing, or is it something that is going to erode the equity within New Zealand farms to achieve that? And how do farmers actually get their head around this without a premium being delivered back to them through their revenue on farm?
Well, there's a few questions in there, Sarah, but I suppose if you sort of look at it from a high level, we are very much so incorporating what we call those non-financial discussions into our interactions with our clients. So helping them to work through, if you're looking at an investment plan or strategy over the next 5 years, how do some of those environmental spends and those costs come into it? How does that impact your land use decisions, your farm systems decisions, and actually making sure we're doing that up front before we make major systems changes or investments decisions, and then factoring in any kind of spends when we're actually putting those budgets through those discussions that we're having.
And the reason for my question is it's off the back of a really great pulse on farmersweekly.co.nz titled "Who Foots the Bill for Environmental Reforms?" written by AgriHQ's Nicola Dennis. And it all comes down to the cost. I mean, we're talking 32,000 kilometres of waterways that need to continue to be funded out of a farmer's back pocket, and breaking it down to a farm gate price. What would your message be to farmers and growers around this country, that not to expect a premium to come in, yet this will be a cost that we all have to absorb some way or the other? It's a hard pill to swallow, Blake.
It is. No, and I fully appreciate the pressure this does put on our producers, because the costs that we're talking about are costs that they're realising now. It's stuff that's coming out of their balance sheet over the last 12 months, the next 12 months, and the 12 months after that. And when we talk around positioning our products in the global markets to maybe get more for what we're producing, that's very much a long-term trend. So we're not going to suddenly get all these strong premiums over the next 12 months simply because we've fenced our waterways this year. So there is that disconnect at spending now to set ourselves up in a stronger position down the line. But again, I can understand the frustrations for farmers who have had that spend right now. All I suppose I can say is I still think it very much does fit into a long-term vision or strategy that over time will put New Zealand producers in a stronger position. And keeping in mind, many of our competitors will still have to face some of these challenges domestically themselves. So they might not be going through some of these costs now, but it's highly likely over the next decade or so they will come under similar kinds of pressure. It might not be to the same extent, but some form, and they'll have to tackle the issues that we're going through and tackling now.
I'm sorry. I just love a good analogy. All I had was a horse racing one where you feed the horse and look after it right up until it goes to runs the race. And then, of course, your markets come in and full of steroids and all of a sudden we've done everything by the book and years and paid for that feed up front for the almighty race. Do you know where I'm coming from? It certainly is, a price-sensitive markets out there, and, it's how we're going to be able to navigate that in an unfair playing field, as we opened at the top with our trade situation, Blake.
Yeah, and look, and the other important factor, remember, whenever we're talking prices for what we're getting for what we produce, is there's short-term supply and demand influences that are always probably going to outweigh the spot price we're getting than any kind of underlying premium. But it's really important how you actually position yourselves longer term to hopefully flatten out some of those short-term supply and demand factors and hopefully limit the risks associated with that.
Absolutely. Well said, Blake. Thank you so much, Blake Holgate, Rabobank's sustainability analyst. And check out Rabo Research podcasts if you're getting into podcasts. Well worth a listen.
This is Sarah's Country.